Something unusual is brewing behind closed doors, and it's already rippling through the highest levels of global business and finance. Billionaires who typically think decades ahead are suddenly acting as if a major storm is about to hit, and soon. Jeff Bezos, the man who built Amazon into a trillion-dollar empire, has just offloaded almost $6 billion worth of Amazon stock in a matter of weeks. That's not small-time diversification. That's a decisive, rapid shift out of his own company's shares. Warren Buffett, the eternal optimist who famously says, "Never bet against America," is quietly doing the opposite. He's unloading more stock than he's buying and sitting on an unprecedented mountain of cash, $177 billion worth. For a man who preaches patience and riding out market storms, this is a clear signal. The next storm might be unlike any he's ever seen. Ray Dalio, one of the most respected hedge fund managers alive, has been openly warning that the U.S. economy faces something more severe than a normal recession if current trends continue. Dalio's language is measured, but his message is clear. We could be staring down an economic heart attack. And Elon Musk, hardly a cautious commentator, has bluntly said that Trump's aggressive new tariffs could push the United States into recession before the year is out. Musk runs companies dependent on complex global supply chains, so when he says tariffs are dangerous, he's speaking from the front lines. Individually, these moves might look like coincidence. Together, they paint a very different picture. The wealthiest, most connected investors in the world are repositioning for a sharp economic downturn, a weakening US dollar, and a shift in global economic power toward Asia. At the heart of it is America's currency. Trump's strategy has been to double down on tariffs and pressure other nations to keep using the dollar in global trade. But if the dollar's supremacy were truly unquestionable, there would be no need for political threats. The fact that Washington is leaning so hard on allies suggests the opposite. Confidence in the dollar's dominance is eroding. Meanwhile, America's finances are deteriorating fast. The national debt has smashed past $37 trillion, and the government needs another $1.2 trillion just to keep operating. Annual interest payments on that debt are closing in on $1 trillion, money that buys nothing new, creates no infrastructure, funds no innovation. It's simply to keep the debt machine running. That's a massive warning sign. Look again at Bezos. Fresh from his wedding in Venice, he dumps billions in Amazon stock in quick succession. He's had a strained history with Trump, particularly over trade policy, and the timing is conspicuous. Buffett is shifting into short-term U.S. government debt, a conservative move that only makes sense if you're expecting instability. For decades, Buffett has been a buyer during downturns. This time, he's bracing instead. Dalio is reducing exposure to U.S. tech and healthcare, two of the strongest sectors of the past decade. He's warning about structural risks most investors don't yet see. Musk is reshaping Tesla and SpaceX strategies to lean on tangible assets. Lithium, solar energy, energy storage, AI, things that retain value even if the dollar slides. When you connect these dots, you see a clear shift. America's most influential business leaders are preparing for turbulence at home and growth abroad. That growth abroad is overwhelmingly in Asia. The numbers are staggering. U.S. population, 330 million. China, 1.4 billion. India, 1.45 billion. Southeast Asia, 600 million. That's nearly 3.5 billion potential customers, more than 10 times the U.S. market. Apple is ramping up in India, Vietnam, and Malaysia. Tesla's Shanghai plant keeps expanding while Musk scouts India and Indonesia for EV and battery facilities. Starbucks is actively building in China and India. ExxonMobil is investing heavily in Asia's energy infrastructure. These moves aren't political statements, they're survival strategies. CEOs can't ignore the world's largest and fastest-growing consumer base. And yet Washington is pushing in the opposite direction. Trump's policies aim to bring companies back to U.S. soil using tariffs, export controls, and penalties for operating overseas. But that collides with business reality. Global companies can't simply abandon the markets that will drive their next decade of growth. The dollar's status as the world's reserve currency has been the cornerstone of U.S. power for generations. Now, even that foundation is showing cracks. Saudi Arabia let its exclusive dollar for oil agreement expire. BRICS nations are actively exploring trade settlements outside the dollar. Longtime U.S. allies are experimenting with the Chinese yuan. Trump's counter has been to threaten higher tariffs on nations that move away from the dollar. But those threats may only accelerate the search for alternatives. Elon Musk has said openly that the dollar's reign won't last forever. Stanley Druckenmiller, one of the sharpest macro investors alive, has declared he no longer believes in the dollar's long-term stability. These aren't fringe voices. They are among the most successful investors of our era, people who became wealthy not by following the crowd, but by anticipating what's coming. What they see is sobering. Rising U.S. debt and interest costs, a slowing economy, political gridlock in Washington, a fracturing global order where the dollar is no longer untouchable. They see U.S. companies preparing for a world where the American market is no longer the primary driver of global growth. They see the dollar being used as a political weapon, which only makes other nations more determined to bypass it. This isn't about fear. It's about pattern recognition, the same skill that made these people billionaires, and their actions suggest the pattern is shifting in a way that most ordinary investors aren't ready for. When the change comes, it won't be gentle, it will be fast, and those who have prepared will be far better off than those who haven't. The message is clear. Pay less attention to official optimism and more to what the smartest money in the world is doing right now. The warning lights are flashing. The clock is ticking.